Hi everyone and welcome to today's morning report on Friday the 10th of October with me, Richard Perry, market analyst at Handtech Markets. The European equity markets have started very negatively once again. That's just following on from an incredible session on Wall Street, actually huge downside, 2% on the S&P 500 to the downside. That was the biggest one-day loss on Wall Street since June 2013. So significant selling pressure coming back in again as the market just discounts these Fed minutes that it had on Wednesday, and it's just focusing back on the lack of growth that's happening around the world. Asia, European markets all finding times tough going, and also the exogenous factors as well, such as the Ebola virus and also just all the geopolitical events that are going on, Middle East, Ukraine, etc. So just all these series of factors hitting on the markets, and certainly big selling pressure is coming through these equity markets, and just continues really. So just significant falls on the downside, and it just looks like it's not stopping really. Whether that's being seen on the dollar and the Forex markets is another matter. There had been a bit of a recovery that was going on through the dollar Forex pairs in the past few days, and that has now just slightly turned around again, and the dollar index had broken below a key low, and that was the first time it had been seen since June. But just a slight turnaround, and that's moving again this morning. All the Forex pairs are dollar positive today. Cable especially lower by 60 points. That's almost about 0.4% there on cable to the downside. So, but I'll talk about how the impact on these individual Forex pairs are going to be going in my other videos. But certainly at the moment, the Forex markets are under a bit of pressure again, and the dollar is strengthening. Now I'll show you the fact that in the equity markets, the VIX volatility jumped 24%, a huge rally in the VIX, just suggesting significant fear now flowing through these markets. That is the equity in the S&P 500 index volatility spiking sharply higher, suggesting that fund managers are taking out significant downside protection on their portfolios, and that is certainly being seen as this S&P 500 continues to drop lower, and it's that's an incredible move that we've seen, highest in the VIX now since February. So significant downside pressure on these equity markets. Anyway, what we're looking out for today, not a huge amount of economic data actually. UK trade balance at 930. Expect it to come in at down 9.6 billion, and also the Canadian unemployment at 130 as well, 7% expected there. However, there is a host of central bankers actually speaking today throughout the day, and there's a few from the Bank of England and also the ECB, but there are also loads of Fed speakers as well. There's for example, Charles Plosser, Jeffrey Lacker, Richard Fisher and Esther George all speaking today, and pretty much all of them are on the hawkish end of the scale, so it could have an impact again on these markets if they come out with anything to suggest that the Fed might be moving. Only two of them are actually voting members, that's Charles Plosser and Richard Fisher. But certainly there is an impact potentially on the dollar, which is beginning to strengthen once again. And that sort of takes me nicely to my chart today, which is the New Zealand Kiwi dollar. The Kiwi dollar had looked to be making this rebound, as I said, on that dollar index, which had formed that minor top pattern. There was also a little top pattern, a little double bottom pattern being seen on this Kiwi dollar. Completed intraday yesterday, but the move above 79.25 just gives us an implied target of 81 actually, but certainly that turnaround already been seen overnight is putting pressure on this Kiwi once again, and this is that double bottom base pattern above that 79.25 mark. It's back about now below. When I was writing my morning report, it was forming support around this old level of resistance around 78.50, but that's now been broken as the European session has got going. The traders are really backing the dollar once again, and if the Kiwi dollar now falls below the reaction lows around this 77.80 mark, then that would certainly suggest that this base pattern is under serious pressure and could be falling certainly back towards the lows anyway. So those lows come in around 77 big figure. That 77 big figure on Kiwi dollar is actually a massive support. Look at these kilos. That the actual support is 76.80. However, those kilos are huge. They are dating back to early 2012. So it's a big low there on the Kiwi dollar. So that you would not really want the Kiwi dollar to fall back below those levels, as you could see further downside. But certainly the pressure is sort of mounting once again. I think even though we've had this recovery pattern completed on an intraday basis, these momentum indicators certainly don't show that you're getting any real recovery. They just look like this once again just unwinding the oversold pressure, but within this downtrend, and a rally would be a selling opportunity. So it's actually sort of, I'm a little bit surprised that we didn't get more of a considered upside, but certainly the dollar is strengthening and it's dragging this Kiwi lower. So a move below that support at 77.80 would put the pressure once again on the Kiwi. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.